Bitcoin traders and investors. This is Current Wave, cwcount.com. Today, we just want to go over what has happened on this third primary wave when we hit the all-time high in the latter part of 2017. If you look at the labeling, and we just labeled the stages of the psychology, the investor's mindset, and always remember from the Elliott Wave perspective, markets trade in repetitive cycles of investors' emotions caused by outside influences. The up and down swings are caused by the collective psychology. Remember, folks, Bitcoin is made by human beings, and human psychology, the behavior, creates these wave formations. And again, the human emotions oscillates between fear and greed. The constant back and forth creates a cycle of market emotions. Now, this is where Elliott Wave becomes so useful because it measures fear and greed through wave counts. And like I said before, because these human behaviors are repetitive, we can discern future movements with tremendous accuracy. So if you look at the stage, when we had this blast off from the beginning part of 2017, you started with the psychology of hope that this Bitcoin is the new thing, will be the currency of the future. But at the same time, you're seeing reservations about this Bitcoin. You see disbelief where you see these corrective moves that happen. But then again, optimism returns, and people are started to say, this is real. This can be a workable solution to replacing the fiat currency or replacing the gold standard. So you see this optimism and start believing, and you see people getting really excited. That really gives you a thrust to the upside. That's translated into euphoria where everybody's getting in. So, and that translates to FOMO, fear of missing out. Obviously, every mom and pop investors want in because they don't want to miss out on the good thing. Then you're seeing the last stage of this behavior, which is the complacency. People started to become very complacent, saying, "Oh my God, this thing's going to go through the roof. There's no risk here," and starts just buying everything. And that's the time when you look at your fear and greed index. It was reading the biggest greed ever in that index, and where that's where investors went all in, and that's usually the contrarian inflection point where you should be actually shorting or selling. But typical retail investors are going all in at that 19,783 level. So I know that a lot of people got hurt holding Bitcoin through today. So, but if you look at the corrective measure, there's this A, B, and we have C that we drawn out. It also is another level of psychology. You see anxiety kicking in. People are getting stressed out. Oh my God, what's happening? I'm sure we're going to pop back up above that 19,783 level. So, when you see the intermediate wave B, the red B there at 17,252, people are started having denial about, Bitcoin going through a crash, or if it's worthless currency. But this denial turns into another selling, and you see panic selling that really plunges the price of Bitcoin. And this is where you see the completion of intermediate wave C for initial ABC wave of this double zigzag that labeled W. Then you had the connector X at 11,776, and you see these back and forth move where people are losing their entire Nasdaq, and I heard that some of the speculators really went all in when the Bitcoin was really taken off in 2017. So there is a stress and anger that permeates, and that's where you're seeing this anger part, and you start to see people getting depressed. Then you see the final mark, which is the capitulation, and that's when the investor starts cashing out. And if you look at the fear and greed index, it indicates in the most amount of fear, and another inflection point for people to get in and buy instead of sell. But typical mom and pop investors have just the worst timing in the marketplace. So just wanted to give you the psychology end of it, because Elliott Wave is all about reading the psychology. I know there are a lot of traders out there. If you just put in Bitcoin analysis through YouTube, you see so many guys talking about moving averages, oscillators, support level, resistance level. Those are another. I think it's part of the equation. It's the holistic approach that you want to use, but I think the forefront of the analysis should be handled by the Elliott wave. Then you see other. You could apply the other RSIs and the stochastic oscillators on top of it, and I think that is the only way, because when you're reading indices, the mass reading, there's nothing that tops Elliott wave. So keep counting. We think there's a tremendous opportunity building with this corrective move here. We think the corrective move is now finished, but once it does, we think the opportunity is going to be even better than that third wave. And just to go over the recent update that I've been presenting, we stated at 95.22 on that 5 minute wave that was placed. We thought that was a 3 minute wave, and the fourth was creating a triangle. It didn't. It popped up and went a little higher. It went higher. I think it went above the 0.618 Fibonacci. So this started getting way too big. So we knew right away that it didn't have the right look. The right look for this is placing minor wave B here, because this was a 50% retracement from this minor wave A. So we think that it was an ideal candidate for minor wave B to be placed there at 10,000, right around 11,000 level as a perfect ABC look. And I think we are on a final leg on the minor wave C to complete the wave Y of intermediate wave 2. So I think today we just finished wave 1 of this wave C. I think we just broke 9,900 and we bounced back. So I think we're on to wave 2. So the rule of right look really caught us right there when the wave C was getting bigger. So we ended up amending the short-term view, and we finally finalized that 95.22 was minor wave A, 10,993 is minor wave B, and now we're on to the last leg of this wave Y. So there you have it. The near-term count is really impossible to get right every day, but as an Elliott wave analyst, if you can't get the broader perspective right, broader picture, then you're no good as a EW analyst. So you better get the big picture right. And we think this lower trend line at that meets around 7,500 with a Fibonacci at 0.6187245. We think that price will, I think, 95% confident that it will get there. But if you look at the recent news, once again, news is just news. It doesn't do anything, and I think this backed approval to start trading has maybe something to do with it. They're launching the physically settled Bitcoin futures, I think, latter part of September, and I think many people thought that was bullish. So there was this bid up process from 10,000 to 11,000. But again, that those news just creates a detour. But the entire trend, it cannot change on the news. I think that now has received approval from the Commodity Futures Trading Commission and the New York State Department of Financial Services to launch. So everybody thought, well, that kind of endorsement should catapult the Bitcoin. But once again, news does not drive the price, human beings do. And that behavior has been already factored in. And now we're resuming to the trend that was established way back, which is down. And we're going to finish this minor wave C. And once it does, tremendous opportunity will come. Until then, until next time, I will come back to you within a couple of days with another update. But for now, goodbye. This is a current wave link, cwcount.com.